Welcome back to Investing and Trading Live, sponsored by Trading Academy. Over 26 years teaching people just like you how to get started in the financial markets if you're brand new or if you're looking for more consistency. How to do that with an actual plan, set rules, odds, probabilities in your favor, and then making the right decision at the right time. If you want to see how that is actually done, we have investing classes that we do all across the metro. We have a state-of-the-art facility right here in Bloomington, but we're going to different areas and neighborhoods near you, helping our listeners in our financial family make smart investing decisions. To come into one of these investing classes, by the way, they're free and they're about 2 hours long. Simply just text the word investing to the number 210, and that's for 2 seats actually, one for you and one for a friend. Text investing to the number 210 for 2 seats for an investing class to get started with the stock market. Also, we do appreciate and love our subscribers on the podcast. Make sure to follow the podcast if you missed part of the show. That's Investing and Trading Live, wherever you listen to podcasts, Apple Podcasts, iHeartRadio, and Spotify. And Alan, normally we have a nice, great topic for this next segment here, and something big that we're going to talk about. But that first segment went by just too fast. We did not get a chance to cover everything we wanted to cover there. So I want to continue that discussion, Al, from that last segment. We were talking about it was a kind of a quick market update in general as far as what the market is doing. And then also with the news, media, earnings, everything that's happening in the markets, all that is just noise. And how we make smart investing decisions is based off reading a price chart, which is what you were explaining towards the end there. And just talking about that with odds and probabilities, we're seeing a potential supply zone in the S&P 500 right now. We've seen over the past few weeks here, since about the middle of April, we've seen a surge in the market from about 494, and I'm looking at the ETF for the S&P 500 right now, the SPY, up about 5%, which is a pretty quick move, is a big move for the S&P 500. And now with a degree of odds and probabilities, with this supply zone, you want to do one thing. You're saying, okay, there's a potential area where there's going to be institutions, like you were talking about in that last segment, where they move the market, a potential they could be selling the markets. Now, the cool thing about this strategy is it's not a be right every time game, because it is not possible to be right every single time. But what if you had proper capital management? You had a small risk, a very, very, very small risk, with a much higher reward. And then you don't have to be right every single time. Right. For an example, let's just say a 5-to-1 win-risk ratio. And all that really means is, let's just say an investor wants to risk $1,000. And that's just a general number. It's a simple, even number that we can use in this example. If you're wrong, you lose $1,000. No big deal. No one's going to go broke losing $1,000. But when you're right, you make $5,000. So basically what that means is you could be right or you could be wrong several times and have one winner within those trades and still be profitable. And that's the strategy that we train and teach, is because there's no such thing as being right every single time. Buffett isn't right every time. He's actually been talking about it, some big losses he had this week. Now, when you have that strategy and you follow it, it takes discipline, and it also takes a person to be decisive. Right. Now, when you're able to have the discipline and you be decisive, it's just simple math. And the cool thing about it is you don't actually need to be a math genius. The computer will actually do all that for you. Now, that being said, how do you help people understand that? Because I don't think a lot of people actually realize you don't have to be right every single time.
Yeah, you mentioned 5-to-1. Actually, if you look at a 3-to-1 reward to risk, you can actually be wrong about 75% of the time and break even.
Yeah.
That means if you're right half the time, you're basically doubling your money. So it's not how many times you win, it's how much you make when you win compared to how much you lose when you're wrong. Mm-hmm. Every professional trader will tell you that's their goal. And you mentioned the word discipline. The discipline we're looking for is the discipline to follow a set of rules that we have put together in a strategy we call core strategy. It's a step-by-step process based on a set of rules. What that is going to do is identify with a high degree of accuracy the terms that Josh has been mentioning, a supply zone and a demand zone. What a supply zone is, you just mentioned one that we may be moving into, that's an area where there could be a huge amount of institutional sell activity that's not active yet. It's inactive, but it's getting ready to be active. In other words, there's sell orders that are going to be in the market when the market hits that particular level, that supply zone.
I think a term that we can probably use that our listeners will understand is unfulfilled orders.
They're unfulfilled orders,
which
right.
means they haven't been filled yet, so they're waiting to happen.
Right. Yeah. In fact, a number of shows ago, I mentioned the fact that we're hunters of unfilled orders.
There you go.
We want, but when those orders become filled, it's important that you have your trade already set. So as soon as that happens, you start to profit.
Yep, and just to kind of be on the flip side of that, I mean, we're talking about the S&P 500. I believe it was Disney. Let me go to the Disney chart here. I believe they actually had a demand zone. So it's an area of willing buyers in the market, or potential buyers. And then you had just wrap proper capital management down around it. Now, one of the really nice things about that as well, Al, is you can set this all up in advance.
Yeah, you should. You have to really to be successful.
Yeah, because there's an area of potential demand on Disney that's about $7, $8 away, which means it needs to come down there before you actually want to be a willing, in this case, a potential buyer. So now when you're able to set your computer up in advance, what does that help people do?
Well, it helps. Look at trading as a way of maximizing your time, using your time for something that you really enjoy doing, and not sitting in front of something that that you're committed to having to do. So if you preset a trade and you do it in a way that you have confidence in knowing that if you're right, and by the way, the most important component of any trade is the price, is the entry price. And because that's going to determine the quality of your risk management and also the amount of profit that you make. So if you can identify with a high degree of accuracy where that precise price is, then you just tell your trading platform, all right, get me in at this price. Now what if I'm wrong? Well, get me out at this price. Maybe you get into something for $100 and you're willing to risk $5. Put a stop loss at 95. But then also you have to be able to determine how much profit potential is there. If you are risking, if you're putting $100 into a position and you're only going to make a nickel on it, then that's probably not something you want to spend your time doing.
Yep.
So identify a profit that, again, is at least 3 times the amount of risk that you have. Mm-hmm. And in order to be able to do that accurately, you have to be able to identify those zones, those supply zones, the demand zones. So let's just look at a demand zone as a buy zone, the supply zone as a sell zone.
Yep.
The reason that that's so important is that the impact of the movement of big money that it has on markets and assets is oftentimes different than what the public is led to believe will happen or should happen. In other words, there can be some manipulation. We're talking about companies that have billions of dollars in maybe one position. And the tendency is there oftentimes for maybe stories to come out that will lead people to believe that something specific is going to happen to a particular asset or the markets, so they can benefit from the emotional activity of the public.
Yep.
So if you can just follow what they're doing, not what they're saying, not what you hear on the news, not what you think should happen based on your experience and what's happened to you in the past, that doesn't matter. What really matters is when these institutions are going to be active, when their buy orders become filled orders, when their unfilled sell orders become sell orders. Those are the 2 things you have to identify. If you can do that, then you have the chance to have consistent returns. As Josh mentioned, not every time, you're not going to ever identify every move in every asset or in any of the market areas.
No.
That's not possible. Everybody has periods of time when they are not right. So what you need to do is eliminate as much as possible those time periods, and the only way you're going to do that is to be able to identify where price is going to move in the direction you need it to move.
Correct. And as you were explaining, mentioned, I think a few weeks ago that traders and investors, you should be a professional hunter, right?
Right.
And what think about a hunter, think about a deer hunter. What do? They prepare. They prepare all season long. Matter of fact, I'm going to be doing my food plots here this week on a couple different spots of land. And so preparing for the season, and then you go out to the season, and it's November. It's that's when the hunting season is here in Minnesota. And then you go out there and you wait. And you wait for, hopefully, your trophy to come by, and you be able to manage that trophy. Now, And a good example is Target. We talked a lot about Target. This was back in 2022 and 2023. I was waiting for an opportunity for 6 months. And that's the cool thing is you wait for the area that you want to get into. We talked about this several times over the podcast and the show. And just waited to get into the price that you wanted to be getting in that position. Matter of fact, that stock was down 60%. Now, how do you feel when you get into those positions? Well, you shouldn't have any emotions, because when you have those odds, probabilities, you don't have any emotions. Most people was thinking, oh, Target's terrible. They're going out of business. I believe there were some people on TV saying that it was going to go out of business. Now, it's possible it could. Any company can go out of business. But it is also a potential area to invest. And that's why when you put those odds and probabilities, that's how you change that game. We have these investing classes where we show you how that's done, where you put those odds and probabilities, and how you identify supply and demand, what that looks like on price charts. It's basically reading a story. Simply to come into one of these classes, just text the word investing to the number 210 for 2 seats. Now, Al, with these different opportunities, obviously you're a professional hunter. You want to wait for price to get into. How does that? So I mentioned you don't have to be at your computer for it to execute. How does that work when you place an investment? And I mean, most people think you have to watch that. Is it just a computer program that does that?
Yeah, every broker has the ability to use technology. And by the way, the technology over the years has improved to the point where it's really in our favor. Finally, something is in the favor of the public, of the little guys, not the big players out there. But with every broker, you should be able to preset a trade. Once you tell your broker or your trading platform that this is the price you want to pay, and the number of shares you want, or the number of contracts you want, or where you want to sell, and the number of shares, number of contracts, that's preset. That is already set. So as soon as the price hits that particular level, whether it's in a buy zone or a sell zone, automatically that trade is triggered for you. So the great thing about this is that one of the biggest problems that people have is they let their emotions get involved in their trading decisions. If you do that, that may be one of the only things we can guarantee, is that you are going to blow up your trades and your investments if you let your emotions get involved. So by having the ability to preset these trades and turn your computer off, so you're not there, interfering with what's happening in the market, that gives you a better opportunity of not being an emotional trader. And all the pros out there will tell you that they're successful because they know how to trade on the emotions of the public.
Another example of that in our real life would be, let's just say somebody is looking to purchase a home. And in this case, they have a realtor or somebody that they're dealing with, and they don't go directly to the seller. They go through their realtor. They say, hey, I'm willing to buy this house at this price. And then they do everything on the back end, and then it comes back to you. So they say, oh, no, whatever. Well, that's similar to the market, but the much better advantage that we have in the market is you don't have to go to a person. It used to be back years ago, right, where you had to call your broker to make a place a trade or investment. Now how easy it is you go to your platform, which is all online, and we teach you how to do all that, so that way if you've never done it before, that you know how to do that. But you just go to the platform and you click a button and say, I'm willing to buy XYZ stock at this price, and not a penny higher. So now you're putting your bid in, or your offer, right? So that's the cool thing about that, is you can do all that from home, not have to call anybody. So if you're a person that doesn't like to deal with other people, well, you have that opportunity to not do that. So
in addition, you don't just have to be in your home to do it, by the way. You can do that on your phone.
Correct.
Anywhere.
As long as you have an internet connection, and pretty much everything has internet these days. So to see how this is done, we have these investing classes to just describe how that's done, to show you what the opportunities are. Tremendous opportunities in the markets right now. To come into this class that we do all over the metro, just text the word investing to the number 210 for 2 seats for an investing class. And that's one for you and one for a friend. Text investing to the number 210 for a free investing class in the metro here. Coming up next, we have a lot more to discuss. We still haven't even got through our first topic here, but we're going to continue this discussion. We're going to get into some different income strategies and retirement strategies. This is Josh and Al, Investing and Trading Live. We will be right back.